Welcome to the Spinal Chat Podcast, powered by the Pennsylvania Chiropractic Association, where science meets purpose and conversations strengthen our profession. Today, we're opening the door to a breakthrough opportunity for chiropractors carrying the weight of student loan debt. Joining us is Dr. Ian Hoffman, president of the Healthcare Access Project, and a strategic business partner of the PCA. Dr. Hoffman has helped chiropractors across the country navigate public service loan forgiveness, income-driven repayment strategies, and nonprofit practice models that can dramatically accelerate loan relief. He's lived this process personally. He knows the steps, the pitfalls, and the strategies that work. If you've ever questioned whether PSLF applies to chiropractic, or wondered how a nonprofit arm of your practice might serve both your community and your bottom line, this conversation will give you clarity and options. Let's get started.
Hi, I'm Mike Barba. I'm the executive director of the PCA. I want to thank everyone for taking the time to watch this video. Today, we've got a really exciting opportunity that we've been working on behind the scenes at the PCA for a while. We're going to be meeting with Dr. Ian Hoffman. He is the president and owner of the Healthcare Access Project. And the Healthcare Access Project is an opportunity that allows for students to pay back their student loans and to get relief from student loans in a federally recognized program. So we're really excited about this. We think this is a great opportunity for attracting new associates and chiropractors to the region and helping with some of that student debt. So Dr. Ian Hoffman, thank you so much for being here.
Hi, Mike. Thanks for having me. I'm excited for today.
Right off the bat, I got to ask, explain to me, if you can, what this program is and maybe the origin story of how the Healthcare Access Program actually got started, or project, I should say, actually got started.
Yeah, you got it. So the program that I help chiropractors qualify for is called Public Service Loan Forgiveness, PSLF. The PSLF program started in 2007 with the College Cost Reduction and Access Act. And basically what it says is that for people who meet three requirements, and we'll go into that in a bit, the federal government will erase all of your student loan debt tax-free. It's the fastest and the only tax-free form of student loan forgiveness out there. And so my origin story is that I am a chiropractor. My dad and both of his brothers are chiropractors. My dad is Steve Hoffman. Bob Hoffman is with the Master Circle. Stuart Hoffman is with ChiroSecure. It's just big in my family. So I grew up with chiropractic and I always had access. So in 2010, I graduated from Life West. 2013, I was doing pretty well in practice and decided to try to qualify for my first little mortgage for a condo. And I was told income was good, but debt to income ratio was way messed up because of the student loans. And that really spun me out, to be honest. I went into the bank thinking, I'm doing all right, I'm excited. And I left feeling like a failure. Like my student loan debt, the hidden costs of all that debt really hit me big time. And I decided to really educate myself at that point to find out, how do I not let this hold me back? And so I did some research. I found out that my goal had been to pay off my student loans as fast as possible, but there are income-driven repayment plans that would lower my monthly payment. And so I switched. That was a mixed blessing because on the one hand, at the time, that let me qualify for the mortgage. Cool. The challenge was that my payments were now less than the interest. And so over time, I started to see my debt actually growing, even though I was making payments. It's this financial black hole of student loan debt. And so many chiropractors are in that black hole. And what I found out is that these income-driven repayment plans will have you make 25 years of payments. At that point, anything that's left is forgiven, which is nice, but the forgiven debt is taxed as if you earned the income that year. And chiropractors today are graduating with around $250,000 of debt. And if their debt goes up over 20 to 25 years, they'll often be looking over a $100,000 tax bill. That's crazy. As I continued to go through this process, I was in practice. I wound up having this really miracle story. This pregnant mom came in as a new patient and she brought her 4-year-old daughter with her to the first visit. This little girl, Caroline, totally changed my life. She had stage 4 cancer. She was as bald as me. And I still get emotional when I think about it. I decided I wasn't going to let finances get in the way of this family getting the care they needed. I took care of Caroline, her mom, her grandfather. It lit me up. And so that really was so meaningful and profound to me that I decided to start a nonprofit branch of my practice to expand access to the miracle of chiropractic care for more people in my community. People like active military and veterans, first responders, people who serve our country and community, and people with low income or financial hardships. And I didn't realize it at the time, but that was foundational for me to meet the major requirement to qualify for public service loan forgiveness. Only government and nonprofit employees are eligible. And so that's the basis behind now what became the Healthcare Access Project, is that we help chiropractors and other healthcare providers to start a nonprofit branch of their practice or run their practice as a nonprofit to expand access to care for their community and meet that win-win of getting their student loans erased tax-free 15 years faster than it would normally take with the income-driven repayment plans. So that's kind of the origin story. I've been doing this 9 years now. We've started over 600 nonprofits, which is unreal. Clients are going to save over $160 million on their student loans. I've done the full 10 years for myself. I got over $166,000 of debt erased. It's been wild.
I mean, what a great story, by the way. And thank you for sharing that story. So I guess I'm going to have to dig into this a little bit more and to understand. By starting a nonprofit, does that mean that you're not able to work for a for-profit practice at the same time? How does that work? And what exactly are the patients that you would see in the nonprofit? Would you promote for that? Can you explain that a little bit more for us?
Yeah, great question. When it comes to public service loan forgiveness or nonprofit work, the government doesn't ask about, care about, look at anything related to also working at or owning a for-profit. So you can do both. And as far as how to separate and what patients go where and how that works, one of the first things that I talk about with clients is we come up with a mission statement for their organization. In fact, one of the bonuses in Module 2, the Healthcare Access Project has 8 modules, step-by-step instructions on how to go from A to Z with this process. But Module 2, we jump on a call and we design the mission statement together. We talk about who do you want to serve in your nonprofit? Because we custom write the articles of incorporation and the mission statement for each client. So what that looks like is typically a lot of my clients serve people with financial hardships, active military and veterans, the LGBTQ plus community, people with racial or ethnic minorities, kids, the list goes on, right? Everyone chooses who they want to give back to. And that's the beauty of this. And that's how you separate your for-profit from the nonprofit. So if your nonprofit serves kids, active military and veterans, and financial hardship, it's only those people who are nonprofit patients. And then everything else is the same. So those people pay the nonprofit directly. The nonprofit then has fee-for-service income. It doesn't necessarily have to do a ton of fundraising or events or marketing or all those kind of things. The nonprofit then uses that income to pay its own expenses, which are typically very low. One of the main expenses is payroll. You have to be an employee of the nonprofit, at least at minimum wage. And so the nonprofit then pays you that paycheck for the service you provide. You then have qualifying employment for public service loan forgiveness.
Wow, that just sounds amazing. I'm going to dig a little bit deeper into that. What you're saying ostensibly is somebody would have the ability to segment their practice. Let's say you have an associate who comes in who has student loan debt. They sign up for your program. They go through this process. You determine that they're correct and they're right for the program and they're ready to do the work. You basically have a guide map on all the things they have to do and how the best practices of actually accomplishing the goal of doing this. They then make themselves an employee of their own nonprofit and paying themselves whatever, minimum wage or what have you, using that then to help the community as a whole. Can you elaborate on that? Am I describing that properly?
Yeah, and it's not just for associates, right? It's a doctor, even with a practice that's a solo practitioner, can do this for themselves. You mentioned associates, so it is an incredible employee attraction and retention strategy when you have a nonprofit, because how many other chiropractic offices out there that are looking to hire can say, come work with us. You'll work with our for-profit and our nonprofit, or just for our nonprofit. And as a result of working for us, we already have qualifying employment for you to get your student loans erased. If you think about a doc today who's graduating with $250,000 of debt, that's like adding over $25,000 a year to their salary for the next 10 years, but it doesn't come out of your pocket, right? Which is huge. And not only does it help you attract great employees, but it also inspires them to want to stay working with you for the full 10 years to get their loans erased. So amazing employee attraction, amazing retention strategy. You nailed it. And then as far as it does work with associates, they can be still like associates or independent contractors at your for-profit, but they do have to be employees of the nonprofit. So whatever situation that you have, that's part of the service I provide is we'll work with you and directly step by step make this work for your situation.
Yeah, it sounds really interesting. You hit on a point that I didn't even think of it in this way is a doctor who is hoping to in the future expand their practice in some way. And perhaps they're a doctor that's been around for a while. They don't have student loans themselves, but they're looking to expand their practice. And they could go ahead, sign up with your program, get prepared, and use that as a lever to attract a student, a young associate or a talent into their practice. I think that's a really interesting opportunity. And frankly, with $250,000 in debt, I don't know a whole lot of people that are paying that off super quickly. And so there's probably a lot of chiropractors who've been paying for a good 10 years already on their student loan debt that could sign up and maybe get the rest of that cleaned up quicker than they could have possibly done through their normal payments.
Yeah, absolutely. When we talk about the black hole of the income-driven repayment plans, like we mentioned earlier, the interesting thing is, like you said, even if someone graduated with, let's say, $150,000 of debt 10 years ago, they might have $200,000 of debt today, even if they were making payments on the income-driven plans because of interest and everything else. And even though they've been paying for 10 years, they still have another 10 or 15 years left before their loans are forgiven and then taxed. So even if they only have 10 years left, even if, it's the same amount of time between now and when your loans would get erased normally with the income driven plans, just getting out of that 6-figure tax bill is a huge benefit.
And just the peace of mind of knowing that there is a light at the end of the tunnel. And that's
it too.
That
Sure.
the burden of, especially if, let's say, you start a practice or you have a practice and you have all the weight and the issues of owning a practice, right? You have employee issues, you've got some marketing things and all the stuff you have to do. And then you have still that debt lingering out there. That's got to be a real weight on the mind of anybody that's going through that particular. And you know what? Another thing I thought of is, boy, what an amazing marketing and a way to give back to your community as a whole, as a practice, to say, hey, we're a practice that is looking to work with patients that need extra assistance. Boy, that's something that could go on the banner of every economic commerce in every small town to really promote the good works that you're doing and to help you with how the community sees your work.
You got it. I had a patient who put it perfectly. She actually came into my office and I always ask people, how'd you hear about us? And she was like, listen, I know that you run a nonprofit and I know that I don't qualify, but I came here because I know you're a doctor who cares more about helping people than what's in their wallet. And that really stuck with me. That was probably 8 or 9 years ago now, but that really hit home for me. So yeah, it did have a positive effect on my for-profit. It did have a positive effect on my reputation in the community. It really spins your public relations, if you will, from chiropractors having this reputation as being like the used car salesman to this is a doc who's doing it different. This is a doc who has a heart, and it's not about making deals or this or that for people. It's really about truly a desire to give back and make a difference in their community.
When I was doing research on finding partners to do this with, there are other companies that are doing this type of work out there. But one of the things I was most attracted to is that this is a program that is run by a chiropractor. So you know the plight of the chiropractor and all the things that they're going through. You've talked through the process of how it works, but can you talk to us about what milestones and checkpoints they go through? What are some of the slippery slopes where people have failed going through this? I think a lot of people start off with good intentions and sometimes they struggle. So can you share with us what some of those issues are? What are the checkpoints? What kind of wraparound service does your organization do to ensure that people are staying focused and keeping their eye on the ball in order to really reap all the benefits?
Sure. Those are big questions. So let me see what I can do to go through those. The first thing is that there are 3 requirements. There are only 3 requirements to qualify for public service loan forgiveness. Number 1 is qualifying loans. There are 4 different types of federal student loans. They're called Stafford, Perkins, FFEL, and direct loans. Only direct loans are eligible. But there's a free process called direct consolidation that will turn the other types of federal loans into direct loans to make them eligible for public service loan forgiveness. So step one is to make sure they have direct loans. Step two is that you have to be on an income-driven repayment plan. And with all the political changes, that's shifted and changed recently. So President Biden introduced a plan called SAVE that very quickly was challenged in court. It's still going through a legal challenge. It's about to be shut down. Everyone who was on the SAVE plan was put into a forbearance. For a long time, that forbearance, the debt was not accruing interest. That started accruing interest again this year. Originally, the SAVE plan qualified for PSLF and then it stopped. So all my clients get ongoing support. Originally, because SAVE had the lowest monthly payment, I was recommending that plan. As soon as it went into forbearance, I emailed all my clients. I posted about it in the private Facebook group to say we should switch from SAVE to a different plan called IBR, income-based repayment. But either way, the income-driven plan, being on or enrolled in an income-driven plan, is step two. So when people join the Healthcare Access Project, the first thing we do is a custom student loan plan. We look at what loans they have, what repayment plan they're on, make sure that they meet those first two requirements and that they have the lowest possible monthly payment to maximize savings and cash flow while we go through the rest of the process. Step two then is we help them start the nonprofit. That's the overview of the three requirements for PSLF: is direct loans, income-driven repayment plan, and then qualifying employment with the government or a nonprofit. As far as where people fall off, I would say really the program actually comes with 100% money back guarantee that once you complete the steps, the last step, module 8, is where you'll fill out it's called the employment certification form for PSLF. It's the official PSLF paperwork. That gets sent to the Department of Education, and they'll send you a letter back that says you have at least 1 month by that time that counts for PSLF. So you know you're in. You don't have to wait 10 years to find out if the program worked. If you're denied, we fix it. If it can't be fixed, you get a full refund. That's the guarantee because we walk you through all three of those requirements. So I would say the only reason that I've seen that people delay being able to qualify or fall off for a time is just life happens. Sometimes there's just unexpected life events that people just need to put this on pause and revisit it later, whatever. But you get access when people join, you get lifetime access. So we go at your pace. It's not, if we put it on pause, sometimes we need to. Yeah. But that's very rare.
How many total nonprofits has your organization started?
Yeah, I'm very proud of this. We've started over 600 nonprofits, which is incredible. Those practitioners are expected to save over $160 million on their student loans, which is really unreal. But I think the number that I'm most proud of is that this is an estimate, but my expectation is that they are taking care of around 20,000 nonprofit patient visits per month, which that's impact, right? That's really what I'm most proud of. I originally called this program the Student Loan Eraser. And I recently switched it to be called the Healthcare Access Project for that reason, is that the student loan forgiveness, in my opinion, that's huge. And that's what honestly motivates most docs to join this process. But the fact that it's such a win-win where we get to make the world a better place in exchange for this, that we get to expand access to healthcare for our own communities and get our loans erased as a result of that community service, that's my focus and intention behind this process.
Yeah, I completely agree. And we all know what's been happening a lot lately politically with hospitals closing and all the issues that are happening. Pennsylvania has a rather large rural community. And you and I were talking before we started actually recording, and you were sharing about that health access is so important. And it's in some cases, and we see this in the state of Pennsylvania, for instance, there is one chiro for every 10,000 possible patients in the state of Pennsylvania. Wow. That's a pretty rough ratio, right? And so if you think about it, there are a lot of places that are rural that a chiropractor may be the only service provider, the only caregiver within a reasonable distance of travel. And so this is a real opportunity to be able to meet them where they're at and where you're at and do some good with this and actually get a little bit of benefit for yourself. So I'm excited about that. I think that's important. And I think programs like this can only help the state of PA with our shortage in chiropractors and trying to bring more chiropractors in.
You got it.
I'm really excited about this partnership and about the opportunity that we're able to promote to our people. So you talked about the success stories a little bit. So talk to me about what is a realistic time frame, right? Somebody comes in, you talked a little bit about doing the paperwork, making sure the loans are correct. But if I came in and I said tomorrow, listen, I'm ready to go, let's make this thing happen. What's the time frame to actually get this started for a normal person getting this started from square one?
Yeah, good question. If you had asked me that a year ago or for the many years before that, I would say the average client goes through this process and has their first month count for PSLF, usually somewhere around 60 to 90 days, depending on if they already meet the first two requirements for PSLF, they have direct loans or on an income-driven plan, or if we need to do a direct consolidation or help them change the repayment plan first. However, because of government shutdowns, because of things going on right now with the Trump administration and the Department of Education in general, just switching to an income-driven plan or doing the consolidation is taking much longer than it was before. So with that in mind, it's not taking longer for the nonprofit setup. So we try to overlap as much of that time as possible. That's why we get the process of making sure they meet the first two requirements done first, and then we start the nonprofit, so that by the time that we file articles of incorporation, you have your first board meeting, you've got a bank account open, and you've got 501c3 status, it shouldn't be too long after that before, if you needed to switch into an income-driven plan or do a consolidation, there may be a little gap or waiting time for that to be processed.
You say scary things, I think, sometimes to chiros. It's amazing how many I talk to that I know how to work on a body, but boy, they didn't teach me anything about business. And you said something scary, I think, to them, your first board meeting.
Yeah.
Let's dig into that a little bit more. Who would
Sure.
be on that board? Let's demystify a term like your first board meeting and what that means to somebody coming into that.
So thank you for mentioning that, because that's one of the benefits of joining this program is that we just make everything so easy for you. One of the bonuses that I give to clients is a pre-written fill in the blank board meeting minutes template that literally they can fill in the blank, read it out loud, have their board sign, and they've had their board meeting. We also have a template for the agenda for your annual board meetings. And 2 of the 8 modules in the Healthcare Access Project cover compliance. But compliance and keeping your your nonprofit, running your nonprofit in compliance with state and IRS regulations, it really requires less than 2 hours a year. So the minimum requirement is 1 board meeting per year, which we show you how to do that in 30 minutes or less, and filing state and federal tax returns. Nonprofits actually have very simple tax returns because they don't pay taxes. Nonprofits are tax exempt organizations. And then the last thing is just every year, it's a good idea to submit that PSLF paperwork to keep track of how many months you have towards PSLF.
So we have a lot of students that are members of the PCA, and we're really glad to have them. What advice would you give a student who may be considering this program? I think everybody should, when they leave school, should have a real plan, especially when it comes to paying off their student loans and what their plan is to take care of these things. Can you give some advice to a student coming out and how they could actually maybe make this a part of their long-term plan to pay back their student loans in the future?
Yeah, absolutely. And Mike, one of the things that I really like about the PCA is that you guys are really trying to support your state and your students and your doctors. So that's so important. And I love that. As far as advice for students, I would say it's just so important to know your options. And so what I would say is that if qualifying for public service loan forgiveness, if this resonates for you, if this is something that you want to look at, there are a couple of options to keep in mind for when you graduate. Option 1 would be, if you plan on just going right into practice, consider starting your practice as a nonprofit. You don't have to run a for-profit and a nonprofit at the same time. There are nonprofit executives that earn in the millions of dollars a year. Nonprofits are businesses, and the IRS has the same requirement for nonprofits as it does for-profits to say that employees need to be paid reasonable compensation. So you can actually be paid the same as an employee of your nonprofit as you would if you started your own practice as a for-profit. So that's an important consideration. If you don't already have a for-profit, maybe consider going into practice and just starting it as a nonprofit so that you get this benefit. The other option is, if you're not looking to start in practice on your own right away, I would say, especially since the state of Pennsylvania is promoting this, look for an office that already has an established nonprofit where you can go and work and get that benefit.
Yeah, I think that's excellent advice. Ian, every state has its quirks, and Pennsylvania is no different when it comes to chiropractors here are dealing with massive issues with insurance reimbursement. They're dealing with an out-of-date scope that we at the PCA are working on and introducing legislation to get updated. And I think one of the things that might be really interesting is how does the realities of being a chiropractor, specifically in PA, and I know you're not in PA, but how does that actually shape working with this program for members?
Yeah, great question. So even though I'm not in PA, I've already worked with several docs who are in PA. One of them specifically is like a veterinary chiropractor, and she goes farm to farm, and even her commute time counts for PSLF, and the work she's doing is really cool. And rest assured that I do understand a bit about the requirements in the state of Pennsylvania and how that works. As far as the way it works with insurance and reimbursements and things like that, 75% of hospitals in the US are nonprofits. And so when an MD graduates with $400,000 or $500,000 of student loan debt, sometimes they go to work at one of those hospitals, kind of like you said, I think your daughter, right?
Yeah.
They don't have to start a nonprofit because they already have qualifying employment for public service loan forgiveness. As far as in the state of Pennsylvania, for people who are looking to start their own nonprofit, all I have to say is that nonprofit hospitals, they still bill insurance. They still, all the same Medicare and those kind of laws apply to nonprofits the same way they do for a for-profit in the healthcare world. But what a lot of people do is we want to be conscious of avoiding fee splitting. And so the definition of fee splitting is when one business has two different fees for the same service, right? The nonprofit is still a business entity. It's a different business than your for-profit. And so the value of having both, if you're billing insurance, is that your regular practice can be your insurance billing practice, and then the nonprofit can be your cash practice. The nonprofit can have a lower fee, or even potentially, depending on the laws in your state, a sliding scale, things like that. And so that allows you to avoid fee splitting, make sure that you're keeping everything, cross our T's, dot our I's. And so again, on an individual level, if someone has a majority insurance-based practice, we can really work with each doc on an individual basis to design their nonprofit in a way that works for them and their practice.
And this sounds incredible. And I only wish that this program was around and that I was able to actually partake in it when I was finished with school myself. I think you have one more success story that you wanted to share. Would you like to share that with us?
I would. In fact, what I'll also do is send you, this person had such an inspirational story that she shared all her information with me, and we actually turned it into a blog article so I could really go into detail. So I'll send you a link to that you can share as well. Her name is Dr. Rochelle. She's a chiropractor here in California. She completed the full 10 years. She got, I want to say it was $284,000 of student loan debt erased, which is phenomenal. And her spouse just got her student loans erased as well. So amazing work. And in fact, if you take on other employees for your nonprofit, there's lots of husband and wife or spouse chiropractic pairs out there, right? That's really common. So you can start one nonprofit and have multiple people work for it and get their loans erased as a result of that, which is really cool. But this person, Dr. Rochelle, the work she's doing in her community is really inspiring. She actually is also working with local firefighters, and she is just sharing the miracle of chiropractic care in a really big way and a really inspiring way. I'll send you the article so that you guys can read more about that. But just to see the letter, this is what I want to attach people to. It is such an incredible feeling when you go to your mailbox after putting in the community service and you get this letter from the Department of Education. Imagine Dr. Rochelle opening and reading this letter saying that $284,000 of debt was erased. You talk about the anxiety and the sleepless nights that student loan debt can cause. And you're absolutely right. Student loan debt there's $1.7 trillion of student loan debt out there. It's bigger than credit cards and car loans combined. It's second only to mortgages. It's the number one reason that people are waiting for later in life for important milestones like getting married, starting a family, buying a house, saving for retirement. So it is a huge issue. And that feeling you get when you get that letter there's nothing like it. Yeah, it's incredible.
Yeah, boy, how inspiring is that? I can't believe how much she got forgiven. That's amazing. Dr. Ian Hoffman, thank you so much for being here. We're really excited to partner with you. We're really excited to make sure that all of our members know about this opportunity and are able to get access to it. And on behalf of the PCA, thank you for becoming a partner with us. And Healthcare Access Project is, I think, going to be a real opportunity for all Pennsylvania chiropractors. With that, I want to thank everyone for listening and watching today, and everyone have a wonderful day. Thank you. Bye-bye.
Thank you, Mike.
That wraps up today's episode of the Spinal Chat. A special thank you to Dr. Ian Hoffman for sharing the real-world roadmap behind PSLF and for helping chiropractors see what's possible when strategy meets service. As a strategic business partner of the PCA, the Healthcare Access Project continues to provide powerful tools and pathways for our members. You'll find links to their resources, PSLF guidelines, and additional support materials in the show notes. If you have topics you'd like us to explore in a future episode, reach out. We're here to serve our profession. To strengthen chiropractic in Pennsylvania, contact your legislators, support the PCA PAC, and consider becoming a PCA member if you're not one already. If this episode brought value, share it with a colleague, subscribe, and stay tuned for more insights shaping the future of chiropractic in our state. Until next time, stay curious, stay engaged, and keep advancing chiropractic care in Pennsylvania.